Good morning, everybody, and welcome to Wednesday morning. Beat the Bell, presented by Kane Capital. Excited to get going. Hopefully everybody is having an awesome trading week so far this week. Yesterday was a pretty fun day in the market, and it certainly brought some volatility. Jerome Powell, Fed chairman, addressed the Senate, stating that the central bank could return to faster interest rate hikes. And that spooked the markets, as we saw on the initial reaction. In about 15 minutes, the market sold 40 points or so, continued in a downtrend for the remainder of the session. Now, Jay Powell is back this morning addressing the House. And to talk about that and everything else that's going on in the market, we've got our panel ready to go, starting with Money Mander. Money Mander, good morning.
Good morning. You hit the nail on the head. Story of the day, Jerome Powell. And we said this, right? Predicting a landing as soft as Kevin Ware. So we'll see what he has to say for the House today. But yeah, not good for the markets right now.
I can't believe you doubled down on that one after the hate you got the first time that came out of your mouth. You know what, man? That's stones. All right. Diamond Trades, good morning.
What's going on? Money Matter 2 for 2. That's pretty nuts. Yeah, Jerome Powell yesterday, definitely going to be the story of the day. We'll touch on it in a little bit. Let's get after it.
All right, Ramsay Rippers, good morning.
Yep, Powell at 10. Excited to get some good trading in. Let's have a good day.
The beard grows every episode. It's fuller.
Dude, I'm telling you, we're going to get shaped up today.
I like it.
I'm going to be going like this very soon.
I like it. All right, Stock Snipa.
Good morning. Let's eat some bags today, and God bless America.
And last but certainly not least, Moe Mamba.
My man, good morning. Good morning. It's good. Let's have a great day today. Some volatility today and the rest of the week.
All right, let's dive right into our Fed forecast and economic calendar. Mander, Diamond, what do we got in store today?
Yep, let's go ahead and start with the economic calendar for today and the rest of the week. We can throw that up on the screen. So we've got balance of trade just came out at 8:30. Jolts is going to be today at 10, the exact same time that Jerome Powell is starting his testimony. So definitely expecting some volatility around the 10 o'clock hour. Tomorrow, initial jobless claims and one Fed speaker. And then Friday, that big NFP print. Again, the last one that we got was 500,000, came in like over 100% higher than expectations and forecasts. So that's going to be a really interesting print on Friday to see exactly how the labor market is doing. Jerome Powell touched on the labor market yesterday in his talk with Congress, so we can go ahead and talk about that. So Powell's testimony yesterday, day one, he gave some remarks to lawmakers early Tuesday that sent both the stock and bond markets into a frenzy after he hinted at the FOMC's willingness to increase the size of their rate hikes going forward. Industrials led this sell-off. The Dow was down about 1.7%, SPY down 1.5%, but tech held up fairly well, down 1.2%, held up better than the rest of them. It was a pretty broad sell-off of 29 and the 30 Dow stocks red, all 11 S&P sectors in decline, particularly banks, right? So banks are especially sensitive to those rising rates. They led the declines yesterday. Go to the bond market, the 2-year closed at 5.011%. That's the highest close since 2007, since just as the great financial crisis was getting started, the 2007 print. And it closed about 1% higher than the 10-year, making the gap between the two, that 10-year inversion that everyone and their mother has been talking about, that has grown to the largest since 1981, about 43 years. Okay, so when people talk about how these, how you're seeing these types of moves in the bond market and how the yield curve inversion is getting drastic, this is what they mean by drastic, right? And the prints that we haven't seen since the last aggressive recession, which was the great financial crisis, and things that we haven't seen since the 80s when there was rampant inflation. So definitely not something to scoff at. Powell mentioned in his testimony that continued strength in the labor market and increased spending to start 2023, alongside with increased factory production, have all applied more upward pressure on inflation than participants previously expected just 3 months ago in December. The market's starting to price in the probability of a 50 basis point rate hike in the March meeting, Ryan, if you want to throw up those probabilities. So this is really the biggest change that happened yesterday. even with the market selling off, even with the 2-year ripping. The real biggest change that happened yesterday is the expectations that the market has for what the Fed is going to do at this next March meeting. Before Powell spoke, the probability of a 25 basis point hike in March, which is the same size as they've been doing this whole time, the small 25 basis points, was sitting at about 69.4%, and there was a 30% chance of a 50 basis point hike, a larger hike than they've been doing the past couple of meetings. Fast forward to after Powell spoke, those probabilities essentially reversed, with now a 72% chance of a 50 basis point hike in the March meeting and a 28% chance of a 25 basis point hike in March. So what does this all mean? The markets are finally starting to embrace and price in Powell's higher for longer mantra. Given all of these things that are going on, the market is still more or less flat year to date. We haven't really sold off. We're kind of still in the same exact spot. Mander, do you think that this is eventually going to be the straw that broke the camel's back?
Yeah, I absolutely do. And so it was good to hear you talk 210 inversion, because I know that people are sick of hearing me saying it. But Jerome Powell stuff was so good. I want to go straight into the probabilities as well. Beyond next month, I want to look at the December meeting probabilities. So we were a broken record harping on this really at the start of February. There was only a 3.9% chance we ended the year over 500 basis points. And so me and you thought that was kind of blasphemous just based off of the Fed's economic outlook back in December. We now have just a 1.1% chance of ending below 500 basis points, with a 37% chance of between 550 and 575, which is the favorite now. And so honestly, even more so than even seeing what we thought come to fruition with that median rate of 525, we're now kind of, it's worse than before that. We're now at a majority favorite of 550 to 575 with a 37% chance. So forego the pivot talk, right? Now they're saying we're going to end higher than was previously being said by the Fed. So we'll see. They come out with their next economic outlook and projections in the next March meeting. So that's going to be really, really keen to look in on their projections for GDP growth, whether they're going to project flat or even decreased economic growth with unemployment rate and with where they see the terminal rate going into the end of the year. That's going to be a huge watch in the next meeting. And to me, really, this all kind of makes sense, right? I think a 50 basis point hike, if we do so get one, would be very warranted off the data we got last month with core and main CPI coming in hot year over year and month over month. We had resale sales tripling forecast at plus 3%. PPI came in hot. Jobless claims were lower than expectations, seemingly like every single week we looked at them. And then NFP came in over 500,000 and tripled expectations there. So really, we're just seeing a historical strength in the economy right now, and especially the labor market with the unprecedented hikes we're seeing. You know, unprecedented hikes aside, they still haven't been able to crack anything. And the Fed's biggest worry here is the entrenchment of inflation. That was one of the biggest things Powell hit on in the testimony yesterday, was that if we get to the point where businesses and consumers just begin to expect that we can't get inflation under control, like they begin to get accustomed to a 4% annualized inflation rate, that's really, really not good for the economy as a whole, because businesses are going to be way more stringent on capital allocation. You're not going to want to reinvest money and grow for efficiency and productivity. And so that's really the biggest harp. Is all the other things aside, they really are tackling price stability first. And that was very evident in the one thing I wanted to pull from the testimony was his exchange between Senator Warren and himself. So after he went through his entire monologue there, Senator Warren really kept harping on the fact that given their unemployment projections on where they think unemployment will go to, for them to get price stability under control and the rate hikes that are going to be needed, about 2 million people in the labor force would end up losing their job. And so she was really pressing Jerome about this, saying, you know, address these people directly. What are you going to tell them, these 2 million people that are going to lose their job? And Jerome really kind of came back aggressively and said, inflation is extremely high and it's hurting the working people of this country badly. All of them, not just 2 million. And so will the working people be better off if we just walk away from our jobs and inflation remains at 5 to 6%? And to me, that really was him kind of directly addressing that the soft landing and, you know, an easy return to price stability is kind of out of the picture here, right? I think without actually saying it, they're kind of saying it, that a recession may need to be induced here to cool off this extremely hot economy and get price stability under control. But needless to say, it is still their main priority. So that was my biggest takeaway from yesterday, really.
I mean, I think that they know that a recession needs to be induced to really tackle this problem. I think that the Fed knows that, and I think that everybody on Capitol Hill knows that. And I think that when you have situations like this where you can put somebody like Jerome Powell, a figure like that up in front of a bunch of people, and you get your 20 seconds of fame, you're going to ask them a ridiculous question. And that's why I honestly just hate I hate these events in general, because they seem like a lot of grandstanding. There's not a lot actually getting done. There's not a lot of information actually being disseminated. I feel like nothing more than is being talked about in their monthly meetings anyways. That'll wrap it up for us here on Fed Forecast. We'll pass back to Alejandro.
Thank you, guys. Okay, so let's quickly talk about the system. I'm going to start by looking at the 30-minute chart. So in hindsight, we got a really nice downtrend yesterday, but I want everybody to remember that 40 points of this move was stirred up on the initial reaction at 10 a.m. when Jerome Powell, when the conference started. Okay, so, or when the address started. So looking back at the chart, you could, a lot of people are probably coming off of yesterday, kicking themselves. Oh, why didn't I make more money? The market sold off so hard. Here's how I played it, and here's why I was able to have a good day. And the best trade, or the best opportunity, was where I got short up here when we were overextended from the 50 SMA. Remember, 80 to 100 points extended from the 50 SMA, we consider to be overbought. That's when I started building a short position. Now, coming into yesterday, I hadn't gotten stopped out of my runner, and I had my runner, which ended up obviously paying nicely. And that's the power of holding on to a runner. But I want to remind everybody that when you have these events that can really move the market, when you have a catalyst, don't get caught up in that, oh, I should have made, so much more money. Everybody on Twitter is going to be showing how much money they made, how good they were trading. Keep in mind that your number one goal, and you could use this going into today, should be to not lose money, okay? Because it's a lot easier to lose money trying to trade these things than it is to make money. So my rule is either to be in all cash or in profits with a runner headed into an event like this. Now, I'm not lucky enough to be in a winning trade right now. I'm all cash. So what does that mean for me? I have to wait until this guy's done talking today. I have to wait for the JOLTS report, the job openings report to come out, because I don't want to take a gamble. I don't want to place a bet anticipating that something's going to happen, trying to predict. I rather react. But this is what the chart is looking at right now. That's a little bit on my mindset going into today. But what is the chart telling us? We, of course, got the sell signal. Keep in mind, guys, taking everything with a grain of salt today. We have another catalyst. It's going to move the market. This may look completely different in about 2 hours from now. So we got the sell signal on the 30-minute chart. On the hourly chart, we broke down below the 50 SMA. We got the sell off to the 50 SMA, came back, served as resistance. Now it's kind of like, okay, what happens here? We obviously filled the gap on SPX. That's why we got the little bounce at the end of the day. If we continue to sell off, that's obviously going to be confirmation that the bears are in control. We know we already have the sell signal. The question is, are we going to get follow through? I have no idea because of the catalyst. So if the market does bounce, if things reverse today, what are we going to be watching for? In my opinion, what's most important is the hourly 50 SMA. If we can recover that level and we can start to trade higher, and we could start to trade back over 4,000 SPX and ES in the futures, that's going to be a bullish looking chart, and maybe things look different than they did yesterday, right? So the sentiment coming into today is, oh, the market looks all doom and gloom, but we don't know what's going to happen. And then, of course, if the market continues to sell off, you're simply just trading the trend that was already established from yesterday, okay? So that is my mindset going into today. It's not going to be easy to trade today. Keep that in mind. Remember, your number one goal on days like today should be to not lose money, pretty much, okay? Beautiful. Let's pass it to Ramsay Rippers for Bet the Bell. That's going to do it for the system. I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. All right, guys, let's do it. Another beautiful day for Bet the Bell. Let's get right into it with the green or red question. Last 2 days from highs, we are down about 90, 95 points. I believe it's 93 points from Monday's high to where we closed or where we hit our low yesterday on SPX. What do you guys got today, Alejandro? Green or red?
Can we get the updated stats, please?
Stats aren't updated this morning.
You got to be shitting me.
I mean, look, my man, you're still in second place, but I mean, you're doing better. Nothing's really changed.
Diamond's got a hand in this. I know for a fact because I take the lead in most all-time wins, and we haven't gotten the chart updated in 2 back-to-back shows. There's something going on here. Whatever. Today, I'm gonna go red.
More continuation already. Mander.
Yeah, it's tough. I think we're kind of overdue for a bounce, but I got to say red here. I think we really could retrace that entire 200-day moving average Bostic pump we had last week.
All right.
I'm going to have to go with green. I think the market's going to try to catch everybody off sides today.
And Moe Mamba.
I'm going to go red.
All righty. The Moe Mamba's going red. I'm going green, too. I got a fib at 39.81, right where we bounce. Matt J, stay in your place, brother. Second question, NVIDIA. Let's get right into it.
Whoa.
I'm telling you, Diamond's got a fucking hand in this. They're about to let him go.
Slow your roll there,
That's
Ramsay.
Diamond, who sent Ramsay Rippers a Venmo before the show and said, don't update the chart and don't ask me green or red. They were about
See
to
how long? Did you guys notice how long it took Alejandro to answer that question earlier? That's because I didn't go first. That's usually how it goes. He usually just takes whatever I take. And now he's trying to talk like he has this amount of wins. Like enough.
It's game time now. I'm catching up. This is like
enough.
This is the playoff race.
I'm gonna go red.
Oh, did I skip Diamond? I didn't even see you on the screen. That's why. Ryan had you off the screen. Come on, Ryan. What are we doing here?
Ramsay, why don't you take some responsibility?
Let's get into our second question of the day. We're going to talk a little bit about NVIDIA. What comes first? We have a 220 gap fill, basically equidistant from where we're trading right now, as well as this the new high on the chart, which would be about 242. We're trading right now at 230. Gap fill 220. What do you guys think? What comes first? Diamond.
I'm gonna say gap fill. Gap fill down at 220.
Yeah, I think that's a pretty ugly looking chart. I'll stick with my thesis of today being red, so I think we're heading lower.
Gotcha. I will say, I mean, possible. I mean, it's daily. It's only what, a week and a half, 2 weeks of price action. Possible IHS and support down at 230. I'm interested to see how we react when we get there. Mander, thoughts?
Yeah, beyond 220, I think we fill this entire earnings jump gap before we see new highs.
Oh, so you're thinking like 208.
What is that? 208, 210. I think you see 210 before this cracks into new highs. Yeah.
Okay. Snipe and then Moe. Muted.
I'm going to have to go at 242.62.
Mamba.
I guess I'm going to go with Snipes on this one. Highs.
Let's go. I love it. The team is indifferent. Last question. Let's pull up the tweet, Ryan. A little bit of crypto, should I say, conundrum, if that doesn't surprise anyone. Coinbase customer who lost $96,000 in a crypto hack has sued the exchange. Kind of want to know your guys' thoughts on this. If you feel that this person has any chance of a settlement, Snipes getting excited, or if this opens the door for new lawsuits, or should I say, people looking to get some more money off of those scams in the future. For me, I don't think anything's really going to happen of this. With respect to Coinbase, just feel like a huge, largely publicly traded platform, as so would be protected under those certain circumstances. But it definitely is, again, not really good for the state of the crypto market as a whole. Diamond, thoughts?
I mean, should he get his money back? Is that the question? I would say no. I don't think this is necessarily going to be an ongoing problem for crypto. I mean, for Coinbase itself, I think that these things seem to be relatively rare. And so as long as they continue to happen with, not a lot of frequency, I think that they'll be able to sort of get around them and just deal with them as one-off cases as a company anyways. But yeah, I don't think this is going to be a huge deal.
Snipe, I saw you shaking your hands up a little bit.
Yeah. So let me just clarify something, right? If I don't see the tweet right now, but that was $96,000 worth of crypto, right? Yeah, he's boned. There's not a chance he's going to get that. Coinbase has insurances, and they will insure up to 25K, but that's the absolute max, no matter what. So it doesn't matter if you had $10 million in there, Coinbase will give you $25,000. The way I know this is I personally had a Coinbase account. I'd rather leave the value of it out, but it was 5 figures. It was worth over 25,000, and my Coinbase was hacked, and I ended up basically losing everything. I didn't even qualify, or they didn't even give me the 25K. But yeah, I would say honestly that person with the $96,000 worth of crypto, he's boned. That's another reason why I'm anti-crypto, because I think it's not even safe to own.
Yeah, now that I think about it, it's pretty absurd. $96,000 in comparison to what 99% of people have lost in crypto. Like, fuck this guy. Why are we even talking? Why is this even a question? Hondo, you got something to say?
Dude, I was gonna share my story. I mean, it doesn't even compare to Snipes'. I mean, but in general, the whole I had an experience where I was trying to send money from like one wallet to the other, only $200, and I sent it to the wrong address, having no idea what I was doing. And I get the people on the phone, and they're like, "Yeah, it's gone." And I was like, "What?" I was like, "What the fuck do you mean it's gone?" They're like, "Yeah, it's in the blockchain or whatever the fuck it is." I'm like literally not understanding. And that to me, like, I have no idea what's going on with any of this stuff. It's like the most sketchy, least reliable. I mean, fuck. I mean, obviously, luckily, it was only $200. Snipes. I'm sorry that you got smoked. I mean, but yeah, in general, this stuff is super, super sketchy, man.
It's in the blockchain.
It's in the blockchain.
Yeah, more like it's in the Care Bear
What the hell is the blockchain?
It's in the Care Bear Village. There's no distinction.
It's in the Care Bear Village.
No
You guys
distinction
see that
between the
South
two.
Park episode where he goes into the bank and he's like, "I'd like to invest my couple $100."
Yeah,
It's gone. That's what crypto.
it's like
yeah.
it's gone.
Mander.
All right. Well, that situation is 100% user error. So I have a little bit less sympathy for Hondo than for
No. But well, I'm talking about like crypto in general. Yes, it's user error, but like how easy. God forbid that was $50,000, and I sent it I typed something in wrong, and poof, it's gone. Like that concept to me alone is insane. Like that doesn't happen when transferring money from a checking account to a city. You know what I mean? Like it's just insane.
No, I agree. And then on the same boat, like checking accounts and everything are insured by the FDIC up to $250,000. So the fact that Coinbase is the custodian here, they're solely reliable for your funds, and they have a breach of security and get hacked, and you're not covered for it. That's just absolutely ridiculous. So I'm no attorney. I feel like they should have a case, but I evidently, in the fine print, they're not going to get anything back. I find that absolutely ridiculous.
Mo, final thoughts?
Well, Hondo, first of all, first mistake you did was type out
Here comes Mr. Crypto.
How the
to tell
fuck
me,
are you gonna type out?
You should have done triple backup.
No, triple backup. There's a QR code nowadays, man. Just scan the shit and send it. Anyways, I mean, I'm pretty sure people have fell for that. Hey, look, man, I triple check. I do triple check when I am sending crypto. But look, thing is what I'm not understanding is why don't people just purchase it on an exchange instead of like holding the physical Bitcoin itself, right? That is, Robinhood, just buy on Binance, on BingX. If you're thinking crypto's going to go up and you want some Bitcoin, just, purchase a damn asset, toss some money in there. Why are you holding these coins and putting yourself at risk of getting hacked like that? So, but I don't think he's going to get any money back. No, I mean, it's a risk. And I'm pretty sure he signed off onto something, right? there has to be something within the line. So yeah,
That is why
So
they have
Mo,
those
you're
hard
saying
wallets, too.
you're saying yeah. So you're saying to not have to like not use Coinbase or to not use Binance, but like own it
no, no,
in like
no,
a
no, no.
wallet or whatever. Or
You
do
can
the
do that and then transfer it over. But what some people do is end up like owning it, but they keep it on the exchange itself and then end up getting hacked and taken it, right? You can transfer it to like a ledger or something, right? And then keep it secure at home. But I wouldn't even risk that because you might end up losing it. You might end up losing your what they call a safe key. So if you're thinking crypto's going to go up, just purchase it like you're purchasing Apple shares, right? I mean, just invest some money in Bitcoin on Robinhood. You know, there's no fees. Just toss in some money on there if you think Bitcoin's going to go up. Hey, you're fine. I mean, unless Robinhood just takes your shit. But instead of trying to own Bitcoin itself, oh, hey, guys, I have 5 Bitcoin. Who gives a shit if you got 5 Bitcoin? If you think it's going up, just purchase some Bitcoin, and then that's that.
Yeah.
Good combo, good segment. Appreciate it, guys. Let's go back to Hondo.
All right, Mo. Coming back to you for Mamba market analysis.
I'm going to go ahead here and share my screen. It's massive, massive. They were just infamous trend line right here. All right, guys. Let's get into it. So inverse head and shoulders, break, hook, and go clean. What we say? We said a move up to 403 to 406 is daily supply. Maybe even potentially fill the gap. We never got there though, right? This was a gap to fill. We still have to fill it. We never did fill it. So what happened was we did end up coming up and testing this supply. I did grab swing shorts on this day here. We got a nice ripper, nice sell off, bearish right here. This is typical bearish setup right here. Next day we dropped, right? Continued bearish setup, right? I'm thinking more downside, but slight gap up and then come down. What I'm thinking we might get is, I mean, it's tough, right, with Powell coming out. But what PA is telling me, gap up, maybe a little run up, and then we come down into this daily demand, and we got to see what happens from there. Once we do test this daily demand, if we do hold, man, I'm expecting we stay within this range. I don't know, maybe Friday NFP takes us out of this range, but I did mention last week where we might get something where we're just chopping around in this range. It's still, I mean, it's still a nice range, right? It's not a bad range. It's not a $2 range or something. So we got a nice range here going on, but this is something we might see, you know, despite all these catalysts happening this week. We might continue to see this maybe up until NFP, and then NFP gets us going to the downside. I'm overall, you know, projecting further downside. I'm even thinking new lows, you know, but again, we take it day by day. But for today, slight gap up, a move up, and then Powell drops us again into this daily demand. If he does get us through, of course, this is the gap fill we do have to watch out for. I really don't think we will close above this gap fill if we do come up here. But if we do, man, I have to say we're going to come up and test these highs. I really do. I don't think that we're going to just close up here and then drop unless it's a failed gap fill support, gap fill, close above support, right? You come down and retest this level. If you fail, hold it, you know, that's a setup for further downside. But so far, I think we're going to be stuck within this range. Today, I do think we test this daily demand, but just be cautious out there. You know, nothing's guaranteed, and see what Powell gives us.
All right, beautiful Mo. We've got some interesting days to come. We're going to go now to Money Mander, who's got the trade of the week for us.
It's time for America's Trade of the Week.
Now, here's a guy who knows how to trade stocks.
All right, awesome. Trade of the week so far, only Wednesday. Hopefully someone tops this. My trade of the week was Apple. I took Apple short on Monday. And so what's not in here, I have a 5-minute just for the entry and the exit. What's not in here is the triple top on Monday's highs from February's double top, right around 156. And this was really the oldest trick in the book, right? Apple obviously ripped Thursday and Friday of last week off of the entire squeeze we saw. But it outperformed on Monday because Goldman Sachs came out and upgraded the price target to $199, which is one, just out of their mind. Out of their mind. In what way in this economic climate does Apple reach new highs? One, should have thrown the red flag already. But two, this is the oldest trick in the book, right? Whenever one of these banks wants to pump up exit liquidity and dump their shares, it's immediately a price target upgrade. Immediately, or not immediately, but we had NVIDIA down to whatever, lows. You saw across the board, price target downgrades. Everyone's bearish on NVIDIA. If Goldman Sachs, like, what do they gain by helping the retail investor? They gain nothing. They're trying to help themselves. So that was immediately a red flag to me. The second this thing triple topped, I was looking to get short on this. So took this short on Monday on the 152.5 puts, rode these for gap fill into yesterday for 158% overnight on a Monday to Tuesday trade. Really can't beat this. Captured like 4 points of move on this one. Trade of the week so far.
Awesome stuff there. It was sick watching that one unfold. And you, of course, got the help. And I think what was most important here is the way you manage your risks. You were taking some off coming into yesterday, obviously understanding that there was a catalyst, and it was risk-free, and it just worked out in your favor. That's what happens when you manage the trade correctly, and, you know, things just go your way. So good shit there, man.
Thank you.
All right, guys. That's going to do it for this morning's episode of Beat the Bell. We hope that everybody enjoyed it. Remember, J-Pow today at 10, Jolts today at 10. Going to be a crazy day in the market, most likely. Hope everybody's having a good week. We will catch you back here on Friday. Final reminder, for those of you that don't know, we trade live all day, every day in the Kane Capital Discord. You can go to kane-capital.com. You can scan the QR code in the top corner as well. And we've got that 7-day free trial going, so feel free to join us. We will catch you guys back here on Friday morning at 8:30 a.m. Eastern Time. Have a good one, everybody.